Now that we have went through the four steps of the closing entry process, the next step is to post the closing entries into the appropriate ledger accounts. When you are posting the closing entries into the ledger account, we're going to write the word closing in the description column of each ledger account. Once you post the closing entry, your drawing account, revenue account, expenses, and income summary are all going to have a zero balance. Let's take a look at a few of the ledger accounts pertaining to our revenue accounts, expenses, income summary, or the drawing account. So the fees income account had a balance of 47,000 from previous transactions prior to the closing entries. We now want to follow the 5 steps in the posting process. Step 1, record the date of the transaction into the date column of your ledger account. Call it step 1.5. Write the word closing in the ledger description column to describe the type of transaction we're about to post into the ledger account. The second step is to record the journal page number into the post reference column of the ledger. So the J4 stands for page 4 of the general journal. Recall that's our audit trail to let us know where the information we're posting is actually coming from. Step 3, record the amount of the transaction into the appropriate debit or credit column of the ledger. Whatever took place in the journal, record it on the same side of the ledger. So we debit fees income 47,000 in the journal. We're going to debit fees income 47,000 in the fees income ledger account. Step 4 is once you post each transaction, determine the account's ending balance. The balance was 47,000 on the credit side before the closing entry. We just debit the account for 47,000. The account now has a zero balance. And that is what you want. Any account that is closed should have a zero balance and is now ready for the upcoming accounting period. Perhaps you're saying, why are these accounts being closed out? That's a great question. The accounts that are temporary, they only show information for that current accounting period. So fees income shows the revenue earned for the month of December. Come January, that's a new accounting period, and you want to begin with a zero balance. Okay? So again, we go through these same steps for each of those ledger accounts. Even income summary, we'll post this first transaction for the 47,000. Well, I didn't show you all of them. But then once you post the other closing entry, once you're done, the income summary account will also have a zero balance. So you should remember the 5 steps of the closing, so the 5 steps of the posting process. Once we have posted all the closing entries to the appropriate ledger accounts, we then prepare what's known as a post-closing trial balance. The word post means after closing. We're a post-closing trial balance. Now it's time to think. At this point, any account that is temporary has now been closed and given a zero balance. So what type of accounts are we going to list on this post-closing trial balance? Yep. You got it. Only your permanent accounts are listed on the post-closing trial balance, because any account that is temporary, it now has a zero balance. So we're now on step 8 of the accounting cycle, preparing what's known as a post-closing trial balance. So again, a post-closing trial balance is a report prepared at the end of the closing entry process to prove the equality of our total debits and our credit balances. It also verifies that any account that is temporary, revenues, expenses, and drawing account now have a zero balance. Here we have a sample of a post-closing trial balance for Eli's Consulting Services. Notice the type of accounts. You have your asset accounts, you have your liability accounts, and you have your account account. These accounts are all permanent. Any account that is temporary now has a zero balance and is not listed on the post-closing trial balance. Notice for the capital account, this is the ending capital balance from the capital ledger account after we have completed the closing entry process. A common mistake that students make for capital, they put down the beginning balance and not the ending balance. But hey, we're at December 31st. We're now at the end of the accounting period. Therefore, we want to show the account balance as of the trial balance date, which is December 31st. These amounts are coming from the ledger accounts for each of your permanent accounts. Get a total for your debit column. Get a total for your credit column. These two amounts must equal one another. If not, you must determine what is causing the trial balance to be out of balance and correct the error before we can close out of the accounting period. Okay? So again, if there's an error on the trial balance, go back and check your ledger account to make sure you recorded the correct amount from the ledger over to the trial balance. Also, make sure an amount wasn't transposed, or you did record an amount on the incorrect side, meaning the account balance should be on the debit side, but you put it on the credit side. The last and final step of the accounting cycle is knowing how to interpret a company's financial statement. Interpret means that you understand the information that is shown on the statements, and now you can help use the information to make all kinds of decisions. So the statements answer questions such as, what's our cash balance? How much money is owed to us by our customers? How much money do we owe our suppliers? And did we make a profit or a loss for this particular time period? This question was asked at the beginning of the semester. Now you have the knowledge to answer these type of questions. So if there's a question about the cash balance, I'll go to the balance sheet to see the amount of cash we have available at the end of the accounting period. If there's a question on how much money is owed by our customers, I'll check the account receivable account, which shows money owed to the client, to the company from its customers. That amount would be $5,000. If there's a question on how much do we owe our suppliers, where do we go? Yep, the balance sheet. And now you're focused on the accounts payable account. The accounts payable account shows how much we owe our suppliers at the end of the accounting period. Questions on whether we made a profit or loss, you guessed it, you'll go to the income statement. So the income statement will show whether we had a profit, net income, or if a net loss took place during the specified period of time. Your job is not only knowing how to prepare these different types of financial statements, but knowing how to interpret them. So when a client asks, what does net income represent? You know how to answer the question explaining that this shows the profit that was earned for the accounting period by subtracting total expenses from the total revenue that was earned. This is the flow of data through a simple accounting system. We first begin what we call source documents. What are these? These are evidence that a business transaction took place. So these could be invoices, receipts, canceled checks, purchase orders, some type of document that indicates an actual business transaction has taken place. Your job is to analyze these documents and record the information from those documents to the general journal. You will then post those information to your ledger accounts. We then prepare the 10 columns of the worksheet, which is then used to prepare our financial statements. So this is the flow of data that takes place normally through what's known as a simple accounting system. That will conclude our discussion over Chapter 6. Be sure to review the information and complete your Chapter 6 homework.